What's up, everybody? Michael Silva here. Holy moly, what a choppy week. Let's get ready for even more of a bumpy ride up ahead. The week finished down 1.14% on the S&P 500, and that is really, despite all the crazy news that went on. For example, Jamie Dimon coming out and warning us about a hurricane. Janet Yellen came out and talked about inflation and how she was wrong. Elon Musk was talking about the economy being horrible, and he needs to cut 10% of the jobs at Tesla. You had Microsoft cut earnings and revenue guidance, and you also had the jobs report come out too, which is, bad news for anyone that was betting on a less aggressive Fed. We also, I didn't even mention it here, we had one of the Fed members, Brainerd, come out too as well, and really had that hawkish tone. Definitely seeming as if the Fed's going to continue this path to fight inflation. Now, I want to go ahead and hop into some key price levels today and what it is that I'm seeing. We're going to go over the S&P 500, the Russell 2000, and also the Qs as well. But overall, you can see we just chopped around in this range. Now, I want to call out a couple of things, right? Contraction leads to expansion. That's something that I talk about very frequently in this channel, right? This is an expansion moon. Now we're contracting, we're getting tighter and tighter. This is paired with declining volume. So not only is price action tightening up and contracting, volume is contracting as well. So we need to watch for a break either to the upside and or to the downside of this channel come next week. Now, what does the risk range look like? Well, last week we finished with inside of it, all right? And then this week, slightly lower high and lower low as well. So we got to think of this in terms of, okay, where's the risk? Where's the reward? You can see here we had, even at this upper level, we have prior support, right? Prior support, it got chopped up in this range. And even over here, it got quite price confused up here too, just chop around. So there is some supply up in this area, and previous support can become resistance. And when you think of it in terms of moving to the upside here into that area of resistance, you would look at this as your reward if you were long. However, if we start cracking down through this and head to the lower risk range or potentially even retest that low, you can take a look here at the risk to the downside is greater than the reward to the upside. So this next week coming up, prepare for a bumpy ride because it can get very wicked if we see some more sell side activity take place. If we take a look at the 15-minute time frame, I want to call out that price action did start getting below the 5-day moving average. It's still inclining, so we got to see what takes place, right? So this is going to be a new day, which means we lose the prior day's data, right? So 1, 2, 3, 4, 5. So we're going to lose this data that is trading above the 5-day moving average, and we're going to start adding new data that's currently below the 5-day moving average, which means that the 5-day movage in a couple of days should flatten out to potentially starting to curl over. And if that is the case, it could signal that we're going into a neutral trend and or we might be in for a decline. So we need to just be, once again, patient here. I will note that if you just look at the volume shelf profile here, you can see there's a big spike there, and then you have a bigger spike here. The point of control can act as a magnet. That does line up with the lower risk range, and we kind of have this air pocket right here. So if we do start breaking down from this level, right, we might get some chop around, but it's highly likely that we fill that air pocket and come down here to test that 400 level. So that is some levels that I'm going to be watching going into next week. If we take a look at volatility, volatility is contracting here. All right, we have the RSI pointing upwards while the price action of the VIX is heading down. The reason why I use these wedges is to just visualize that, hey, we have expansion and we are contracting, getting tighter here, which means that we can lead to expansion, all right? Which means it can come shooting back down, right? Or we can have a big spike to the upside. One of the indicators that I like to use is this right here. And this is looking at the Spider Barclays TIPS ETF. And we're putting it over, dividing it into the U.S. Treasury bonds. Now, don't ask me why this indicator has been pretty precise these last 9 out of 9 times, but it's data that we need to pay attention to. And what is that data specifically? Well, it is when that the rate of change is basically crossing up through 0, and then we hit a rate of change of about 1.3. And when that happens, I highlighted all the red vertical lines here across the screen. And what you'll see is if you look to the bottom is each time that we got those vertical lines, shortly thereafter, we had the VIX spike. Okay, so we spiked, spike, 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 okay? And now what did I just notice? Well, guess what? We just shot up there in a hurry, which could indicate that we could very well be seeing an early indication that volatility is right around the corner, okay? So that is something that we need to be very mindful of. If we continue on, now, by the way, these aren't holy grails. These are just correlations that I found and interesting pieces of data that I wanted to share with you. So it's happening again. I'm bringing it up, right? If we take a look at IWM, we look at this weekly risk range. It's like 195. Where is it? 192.93, and then the lower range is 181.19. You can see we had an inside trading day. Volume is contracting, price action contracting as well. Okay, now if we look at the 15-minute time frame, this is actually trading above an inclining 5-day moving average. So, Mike, what's that mean? Well, it means that the short-term view here is actually bullish bias. Until this starts getting below a declining or neutral 5-day moving average is when I would become a little bit more bearish in this case. Now, I do see that rising wedge structure, which tells me what? Expansion, price action is getting very tight right here, which could mean that we're in for a, big move potentially into next week, an expanded type move. We have a negative divergence on both the RSI and the PMO. All right. Now, if I break that into even a smaller time frame, the 5-minute time frame, and I want to show you yesterday's price action or Friday's price action. Okay, and we have a 200-day moving average here. The 200-day moving average, 200 period moving average on the 5-minute time frame, I should say. You can see that price action is holding that level. So that might be a key thing to watch for the IWM if price starts trading below it and it starts acting as resistance. But you can see once we got above it, we've been holding holding above it as a level of support. Now, once again, right? Expansion leads to contraction, and this price action is getting very, very tight. So we're going to see some sort of explosive move here in the very short-term future. It's going to come probably on Monday, if not Tuesday. All right, so we'll be continuing to pay attention to that. If we start, like I said, cracking below it and getting below the 200-day, I mean, we can expect to see stuff like crazy price action, right? Come right back up. Just keep an eye on how this starts to form and see if it starts to kind of head downwards. Now, if I go into the daily time frame, one other thing that I want to point out here a little bit more zoomed in is it does have that rising wedge structure on a larger time frame, right? So we're looking at this dating back to May 9th, and we have that volume that is contracting right here, as well as price actions getting very tight. So this can break either way. All right, rising wedges are technically more of a bearish thing, and the trend remains down. So it would be bearish bias on the daily time frame here, including when you look, even more zoomed out. And when you zoom out, like I said, right? So where is the risk? Where's the reward? Well, prior support, right? Broken, became resistance. So this area, especially under a declining 50-day moving average, right? If we shoot up, the reward to the upside is, pretty minimal, at least to begin with. And then the risk to the downside is quite great in this particular point of view on this current chart, okay? So once again, I want to just kind of recap over here. Price action getting very tight with the contracting volume. If we start getting below the low of this inside trading candle, that could start a break to the downside. If we start getting above it, that can start a break to the upside. So pay attention to this very key element here. If we start breaking down and we get a big hit of volume to the downside, that could indicate more distribution and could present itself more further downside in the IWM. All right, so what we'd like to see, if you're bullish, is obviously a break above and then start holding that level, maybe even above this 192 that we just previously mentioned was a prior area of resistance. So you want to, break above, you want to hold above it multiple days, and then start to see it kind of build a base from that level if you're bullish. Now, be aware that the volatility is still elevated, especially in the Russell, okay? So yes, the volatility has been coming down, but still it is above 30, all right? Even in the mid-20s, I mean, that's still relatively high looking back to the left side of the chart here. So it is still high, which tells me that, hey, you just got to be on guard. If we take a look at the Qs, also very similar type, price action, right? We had that on the jobs report, that big gap down, but the price action didn't really move all too much throughout the day. We finished down 2.6%. But overall, right, volume, it's kind of getting tight up here, and then price action is getting tight. So not much movement despite all those news events. We're holding above a declining 20-day moving average. We're below the 50 and below the 200. And if you take a look at the chart overall, right, we had prior support. It got chopped up in this area, right? Prior support can become a level of resistance. So even to the upside, right, we're looking at around 315. Where's the Q's upper range? 316.67. But just be mindful that, hey, if we start cracking down, there is still, it's all about the probabilities of where price can potentially go to. And you gotta just be aware of the risks to the downside right here in the current trend. All right. Let's continue on to the 15-minute time frame. I want to call out, just like the SPY, right? We are below a 5-day moving average, so that is not a good sign as of right now. It is trading sideways, and it's kind of holding that 305. So, what can we potentially watch for? Well, like I said, I'll come Monday, we're going to have a new trading day. It's going to erase the prior data, and then we're going to continue to see this potentially flatten out to start to reverse if price action stays below that 5-day moving average. So we got to be aware and anticipate where that moving average might kind of go to. If price action starts getting above and saving it, yeah, that opens the door to fill this gap and hit that upper risk range there. Now, we do have, very similar to the SPY, the negative divergence on both the PMO and the RSI. I will say this 305 level, like I said, it's holding very, very well right now. And the more times that it, obviously is testing that support, the more likelihood that we'll eventually see that break. So if that breaks, that opens the door to fill the gap beneath us and potentially hit the lower risk range of around 295. I would personally like to see it crack below 295 and then hit this prior area along with this kind of a volume shelf profile right here, and then potentially look for a bounce from that area if you're more of an intraday trader. Of note, also, volatility in the NASDAQ 100 is still above 30. It's at 31.75. Okay, one last thing that I want to point out here is semiconductors. They make up a big portion of the NASDAQ composite. Also, we're looking at a 30-minute time frame here, 65-period moving average, which is the 5-day moving average. Price action's also below that. You can see it try to get above it. It's been holding as resistance. We'll see if we can get back above it, but we will lose 1, 2, 3, 4, 5. We'll lose this, right? And then we're going to start going off of this data over here. So if price action stays below it, it can start flattening out. And if it continues to stay below it, it's going to start heading downward. So we got to see if price can recoup. Also to note, negative divergence on both the RSI and the PMO here too as well. All right. One other note to point out is we have price action trading pretty just kind of sideways right here next to this volume shelf profile. And you can see that it's kind of just, undercut just really quickly this 240 level. And now we're kind of heading this way again. The gap might act as a level of support, but I wanted to point out the lower area down here. It's kind of just there's really no volume on this run up, which tells me that this air pocket, it's like a vacuum. It gets sucked the price right back into the volume shelf profile over here. So that could indicate a potential area if you are wanting to long or you're looking for a better entry, is to see if it gets outside of the risk range and potentially comes into this point of control right here to around 228, maybe 229, 230. That gets outside of the risk range. You take a long position, which it'll be scary at that time if you get a quick hit to the downside. But if you do have that, it can easily come right back up into the risk range, right? 68% of the time it closes within the risk range. But that could make for a good risk to reward trade if you are looking to see if we get a big hit to the downside and play a bounce from that level. That's all I got for you on today's episode, everybody. Hope it helped out. I'll get into some other more in detail charts coming next week. I had to keep today's video pretty quick and to the point. All right, see you later.